And welcome back. In today's video, we're going to go over what's happening right now in the California housing market, a video I make every single month for you guys. So to start this video, I want to read the beginning of this article from the California Association of Realtors that was just posted yesterday. It says California's spring home buying season continued to fall short of expectations as elevated mortgage rates and growing economic concerns restrained home sales from a year ago for the fourth consecutive month. And we'll go over a lot more of that in today's video. We're going to talk about home sales, home prices, housing inventory, price projections, and much, much more for the state as a whole here in the California real estate market. And of course, if you're new here, I'm Jason Walter of eXp Realty. I'm a realtor in the greater Sacramento area. If you guys want to learn more about the Sacramento housing market or neighborhoods, I have a second YouTube channel, which is called Sacramento Home Goals. But in today's video, we're going to go over what's happening right now for the state as a whole, and stay tuned for part 2. I'll make a separate video posting about a week from now regarding what's happening at the county-wide level in the state. All right, so let's go ahead and dive right in. And of course, I appreciate you guys for joining me in today's video. This slideshow is from the California Association of Realtors. I'll provide my own analysis based on their data though. So here's a snapshot looking at what's happening right now. And this, by the way, is only looking at single family houses in the state, and which of course excludes multifamily units, rentals, condos, and new home construction as well. So for the month of July, home sales are down by 4.1% compared to July of 2024. Our median sold price is $884,000 right now. That's down by 0.3% year over year. That is highly unusual to see prices down compared to the previous year. I'll share a lot more regarding that here in a little bit, but very unusual to see prices are down. But looking at prices compared to the past 6 years, it's pretty mind-blowing. The unsold inventory index, 3.7 months, that's a gain of about 28%. This metric right here it indicates the balance between supply and demand. Back then, the month supply was over 17 months in 2008, and therefore prices cratered, right? Now we're at 3.7 months. It is elevated. I'll go over in detail how this compares to years past as well. Days in the market is at 28 days, a giant increase up by 40%. However, compared to the number of days, it's about 1 week longer compared to 12 months ago. All right, let's talk about sales in California. It says sales slipped in July, pushing the year-to-date percent change below last year. So we're basically on track to have fewer home sales this year compared to last year, which is pretty remarkable given the fact that on a national level, we had fewer home sales compared to the 1995. So last year, for the nation as a whole, home sales decreased to the lowest levels in about 29 years. And we probably could get that again this year. We'll probably be at a 30-year low on a national level. Despite that, though, keep in mind, home prices still increased last year compared to the year prior. So just because we're seeing a big decrease in sales does not imply we're going to see a huge correction in home prices. And actually, the data supports that. Look at 23. 23, which is right here, we saw a huge decrease in sales, and we saw that fall off a cliff in the last half of 2022. But we saw a low level of sales ever since 2023. But home prices overall in 23 and 24 compared to the year prior still rose. But it's eye-opening to see here that sales have been around 300,000 on a seasonally adjusted basis each month, compared to the normal trend, we should be seeing around 400,000. So a lack of transactions over the past, 2.5 years. They also provided this as well. This is the percent change in home sales by price tier. So for example, we only saw gains compared to the year prior in the range of 300 to 499,000 and over $2 million. All these other price segments decreased compared to the year prior. And this is much different compared to about a year ago, where we saw huge increases in more expensive houses and huge decreases in the more affordable range. And now sales have been relatively flat across all these price tiers. Now, I do not expect to see a huge increase in home sales due to a variety of reasons, but mainly due to this right here. This is the measure of pending home sales compared to the year prior. So pending home sales decreased by 6.9% from July of 2024. And on average in California, once you get an offer accepted, or if you're a home seller and you accept an offer, on average, the house closes in about 30 days. That's our escrow period from offer acceptance to you get your keys to your house if you're a home buyer. It's around 30 days. So we're seeing a huge decrease of pending home sales, a future indicator of closed home sales next month. So I would imagine that once we release August data, which will be about a month from now, we'll probably see a low level of transactions or closed home sales then. All right, let's change gears and talk about prices. I have so much to share regarding home price trends. So here's the median sold price, $884,000. This means out of all the houses that did sell in July, half sold above that amount and half sold below that amount. That's the median number. It decreased compared to last month and fell by 0.3% from 1 year ago. All right, I have a lot more to share regarding this. And this, by the way, is my own analysis of their data. I actually pulled this from their website years ago, and I just add current figures. So I actually just pulled the price and the month, and everything else is my own analysis. Anyways, looking at July, this is very important to know this because anything that has to do with a closed home sale is a lagging indicator. So it says here, this is my own notes. This is from closed home sales in July. We're going to talk about the median sold price here in California. These are home sales that actually closed in July, and that's based on what the market was like 1 month prior. So closed home sales in July was really an indication of what the market was back in June. So for example, like I mentioned, the escrow period generally is about 30 days. So offer acceptance to a closed home sale, on average about 30 days in California. So July's median home sold price is based on offers being accepted on average in June. Any metric that relates to a closed home sale is a lagging metric, like I mentioned. So because we're talking about July's closed home sales and prices, let's have a look at what happened with rates. So this is according to our good Uncle Fred. Haven't said that in a while. This is looking at average 30-year fixed rates for the month, according to Freddie Mac. So back in June, again, when offers were accepted, then it became a closed home sale in July, was at 6.82% on average. Flat compared to May, but an increase compared to past several months. However, looking at 1 year ago, though, we're at 6.82% this June. Last June, 6.92%. So a very small decrease compared to 12 months ago. And by the way, because mortgage rates on average were less than 1 year ago and home prices have been coming down, it's actually more affordable to buy a house here in California. I'll share some data regarding that here in a little bit. So anyways, looking at 884,000, that's the lowest since February this year. However, though, these figures are not seasonally adjusted. And also it's normal to see prices come down this time of year. In other words, they normally peak around May and June each year. And here we are in July. So it's normal to see prices coming down from the season highs that we see in late spring each year. However, what's not normal though, like I mentioned earlier in the video, is a decline in prices from 12 months ago down by 0.3%. Prices have been negative year over year only 11 times since March of 2012, because I have data that goes back to the 1990s. So for example, this means that prices have only been in the red only 11 months out of the past 161 months. So it's very normal to see prices higher compared to year prior, ever since March of 2012. In fact, the only other months in which prices were negative compared to March of 2012 were the past 3 months. And before that, it was a time frame from November of 2022 through June of 2023. And back in November, that was the first year-over-year decrease since February of 2012. In other words, the first decrease in about 10 years back then. Going back here, this also marks the third consecutive month of year-over-year decreases. And on top of that, this is a big reversal compared to what happened last July. Last July, we saw a gain of 6.5%. Now it's down by 0.3%. In addition, this 0.3% decline is much worse than the average July, going back to 2010, on average, we're seeing a gain up by 8.2%, whereas this year we're down slightly. What's also unusual as well is that we're down by 1.7% compared to June. Compare that to the average gain we should be seeing this time of year. We should be seeing a gain up by 0.2%. Now, just to provide some context here, this is kind of important here. Looking at the decline during the Great Recession, that was July 07 through July 08, we saw a huge decrease down by 39.6%. This year, down by only 0.3%. On top of that, if you own a home, over the past 6+ years, you're sitting probably on a lot of equity because we're seeing a huge increase up by 45% compared to July of 2019. So to briefly summarize this, homeowners who have actually owned a home since at least 2019 are sitting on a lot of equity. On top of that, this 0.3% decline in the grand scheme of things compared to the past several years is really a nothing burger given the fact that we're seeing a huge increase in prices from July of 2019. However, though, will this change or get worse though, given the fact that this is very unusual to see prices down year over year? All right, let's get back to this slideshow from CAR. So on average, for all the houses that did sell, this is the sale price to a list price ratio that dropped to the lowest level in about 2 years. That ratio was at 98.5%, which means on average, out of all the houses that did sell in July, this sold for 1.5% below the seller's asking price on average. This is way different compared to the craziness of 21 and early 22, when on average, homes were selling about 4% over asking and inventory was depleted back then. Now, speaking of that, back then in the spring home buying season, on average, 73% sold over the asking price, and now it's only 31%. So of course, this means that 70% are selling for less than the seller's asking price or their asking price on average, which is lower than the 44% we saw 12 months ago. Speaking of homes being more affordable today than they were 12 months ago, here we go. The average mortgage payment is down by 1.7% year over year. That's because prices are down, but on top of that, rates are also down slightly from 12 months ago as well. And this is a giant improvement compared to what we saw in 22. Look at that. Back then in early 23, late 22, we saw a giant increase up by 50% in your average monthly mortgage payment because rates went from 3% to about 7 or 8% by October. Okay, let's talk about inventory. I have a lot to share regarding that. So inventory's at 3.7 months. 1 year ago, it was at 2.9 months. An improvement, which is clearly showing the market is actually slowing down slightly. Let's take a deeper dive at this month supply at 3.7 months. And this is a data pool I pulled from the California Association of Realtors website. And of course, I'm providing my own analysis, just like home prices. So at 3.7 months, let's see highest for the month of July since July of 2014. Back then, it was at 3.8 months. On top of that, 3.7 months is higher compared to June of 2019 and the average July going back to 2010. Back then, on the average, was at 3.4 months. Therefore, we're at slightly elevated levels compared to historical norms, but well below the crash during the Great Recession. So for example, the all-time record high was set back in January of 2008, where the month supply was at 16.6 months. Now we're at only 3.7 months. Additionally, we actually have been coming down as well compared to the 3.8 months we saw in May and June this year. So I do not expect to see anything close to the Great Recession due to economics 101. We have, moving towards the buyer's market, but not even close to the extremely strong buyer's market we had during the Great Recession when the month supply was basically almost four times the rate we're seeing right now. All right, let's also talk about active listings, which is the total number of homes for sale in California. It says active listings increased to the highest level since October of 2019. However, these figures are not seasonally adjusted. Inventory in general tends to peak in the late summer, early fall months. So for example, this levels right now for July are the highest for any other month since post-COVID, since 2020, but we still have fewer homes for sale compared to July 18 and 2019. They don't provide the actual figures, but just eyeballing this, back in July 18 and 19, we did see around 55,000 to about 60,000 houses for sale. Now we have approximately 50,000 homes for sale. Therefore, inventory is rising, which is helping cause prices to decline and for buyers to have more negotiating power. So therefore, on average, homes are selling for less than the asking price, and homes are taking longer to sell, which is all good news if you're looking to buy a house. If you're looking to sell a house, definitely have a look at the market, because the market is clearly slowing down. So don't try to set a new record in your neighborhood because of the strong increase in inventory. Of course, this is location dependent. Some areas in Sacramento or the greater Sacramento area or in California may be still very competitive, whereas other areas may be a strong buyer's market due to a huge increase in supply. And of course, if you want to learn more about the Sacramento housing market, of course, check out my other YouTube channel. Again, that's Sacramento Home Goals. I used to make Sacramento updates on this channel, but because you guys are located all over the country and frankly the world, a lot of people don't want to learn about the Sacramento housing market. So that's why I post updates on that channel. So something to keep in mind though, even though we're seeing a huge increase of the number of homes for sale, the gain compared to the year prior is actually losing momentum or decelerating. So the gain is up by 37.7%. But as you can see, for the past 1 to 3 months, that percent is actually losing momentum. So in fact, that gain of 37% is actually the smallest one in about 7 months. And this deceleration, by the way, is likely due to the fact we're seeing fewer new listings hitting the market. And just in my personal opinion regarding this, CAR does not provide new listings data on that. And so what we're seeing here in the Sacramento region is that inventory is up by about 40%, but new listings are only up by 8% year over year this July. So we're seeing a low level of new listings in Sacramento and in California as well due to elevated rates, because of course a lot of home sellers are home buyers as well. And when rates are at 6.5% to 7%, for example, and they have a 3% rate on their house, they will be less likely to want to sell their house and buy a new one and get trade in the 3% rate and to get a 6.5% rate, for example. Let's also take a look at the percent of reduced price listings or price drops. So this is from altosresearch.com for the week ended August 15th this year. So they're stating here that 38% out of all the houses for sale in California have reduced their asking price. This means that 4 out of every 10 houses for sale in the state have reduced their asking price. So at 38%, that's higher than last year at 33%, higher than 23 at 29%, but at 38% right now, that's still lower compared to the same time frame in 2022. Back then, it was 40%. With that said, if you guys want a real estate agent referral, check out my website, which is realestateteamfinder.com. Or if you're looking to buy or sell a house in the greater Sacramento area, of course, you can check out that website as well. Also provide my information or my contact information in the video description below as well. With that said, hope you guys have an amazing day. Please like and subscribe, and we'll see you in the next video. Thank you very much.